Most people think they miss money because they don't find good stocks early enough. That's not true. They miss money because they look at the wrong signals, at the wrong time, for the wrong reasons. They chase noise, not positioning. And right now, there's a strange disconnect happening in the market that almost nobody is talking about. A company can be name-checked by the CEO of Microsoft, work with OpenAI, receive recognition from the United Nations, and still trade like the market doesn't care. That contradiction should immediately make you curious. Because either the market is right and this story is overhyped, or the market is wrong and something important is being mispriced. And by the end of this video, you'll understand why this exact situation is where people either get trapped or quietly get ahead, but only if they actually understand what they're looking at. Before we go any further, understand this isn't financial advice, and I'm not a financial advisor. This is about awareness, timing, and risk. Now, let's talk about why this company even matters. Not the name yet, the setup. Food security is becoming one of the most expensive problems on the planet. Supply chains are fragile. Climate volatility is increasing. Labor costs keep rising, and traditional farming doesn't scale cleanly anymore. The companies that figure out how to grow food reliably, locally, and predictably are solving a problem governments actually care about. That's where this story starts. The company is Agros Inc., trading under the ticker symbol AG or Z. It's a vertically integrated agtech company focused on indoor CA vertical farming, artificial intelligence, and robotics. They design, build, operate, and manage climate-controlled farms that grow pesticide-free vegetables year-round. This isn't a concept company anymore, it's operational. And that's where things get interesting. Agros went public in October with a Q4 IPO priced at $4. Shortly after listing, the stock ran to $7 by mid-October, then dropped hard alongside the broader market at the end of October, falling to just $180 before rallying aggressively to $5 and then pulling back again. Volatile is an understatement, but volatility isn't the same thing as weakness. Sometimes it's just uncertainty. What makes this situation unusual is the validation stack. Agros has been recognized by the United Nations Development Program and included in the Malaysia SDG Investor Map, which highlights enterprises aligned with global sustainable development goals. That alone puts it on institutional radars most penny stocks never touch. But it didn't stop there. Agros received Malaysia's Best Agro-Technology Award for Innovation, along with the Emerging Brand Legend Award recognizing rapid growth and future potential. Then something happened that most microcap investors overlook. Agros was selected by Microsoft to present its Agros Copilot directly to CEO Satya Nadella. That relationship matters. Through Microsoft's AI Cloud program, Agros built and deployed its Agros OS software on Microsoft Azure. The company is using generative AI technologies through the Microsoft Azure OpenAI service to develop Agros Copilot, a system that allows human farmers to input instructions and queries to optimize crop growth, energy usage, and supply chain efficiency. This isn't a buzzword slide. This is software actually being used to run farms. And that changes how you should think about the business. Now zoom out. The global agricultural market is expanding rapidly as food demand rises worldwide. The agtech market is projected to grow at a compound annual growth rate of 13% to over $75 billion by 2032. Vertical farming specifically is projected to grow at a 20% compound annual growth rate, reaching $21 billion by 2029. And vertical farming in the Asia-Pacific region is expected to grow nearly 30% annually over the next 5 years. Those numbers matter because Agros operates directly in that growth lane. Financially, the company has already shown traction. From 2022 to 2023, Agros reported over 500% revenue growth, 2,700% gross profit growth, and net income growth of over 300%. Last year, Revenue increased 127% and gross profit rose 84%, while net income declined 4%. When you break revenue down further, income from designing and constructing vertical farms increased from 1.8 million to 4.6 million in a single year. Fresh produce sales climbed to nearly 4.5 million. This isn't theoretical demand, it's real money coming in. Operationally, Agros currently manages two main vertical farms. One is a 10,000 square foot indoor CA farm at Kotor Dam in Sara. The other is a 5,000 square foot farm at AO and Mall Alpha Angle. These aren't massive facilities, but that's not the point. They're proof of execution, and proof is what unlocks partnerships. Recently, Agros announced a breakthrough in growing Japanese strawberries using AI-powered technologies. The company stated this development allows Japanese strawberries planted in Malaysia to be distributed locally by the end of Q2 next year, initially to major existing retailers, and later to Southeast Asia, the Gulf Cooperation Council region, and beyond. On the surface, that sounds incremental, but the real signal was buried at the end of the announcement. The strawberries are being grown and managed using Agros Robotics. Specifically, watc AI humanoid robots are being used to monitor and manage the CA vertical farms. These robots are designed to boost productivity, reduce labor requirements, and deliver more consistent crop quality. That matters because labor is one of the biggest bottlenecks in agriculture. Remove it and margins change. This development followed an earlier announcement that Agros Robotics entered a collaboration with agtech Robotics, a global leader in humanoid robotics. This partnership was announced at a launch event and represents a strategic step forward. Agtech is not a small company. It trades on the Hong Kong exchange with a valuation of nearly 55 billion, roughly 7 billion US, and employs over 2,000 people. Under the collaboration, agtech's watc will be integrated as a hardware platform into Agros OS to automate seeding, monitoring, harvesting, and crop optimization. Agros CEO described the partnership as a major milestone in redefining agriculture through robotics and artificial intelligence, aiming to build smart, self-optimizing farms that scale clean, safe, and sustainable food production. The company was also recently featured by Fortune in a piece titled "Turning Farms into an Asset Class," highlighting how Agros is reshaping agriculture. So here's the real question. When a newly public company has Microsoft, OpenAI infrastructure, United Nations recognition, national awards, Fortune coverage, and partnerships with a 55 billion valuation robotics firm, but still trades like a forgotten microcap, what exactly is the market missing? Or is the market simply early? This is where risk and opportunity overlap. At current prices, AG or Z is not a sure thing. It's a stock to watch right now. One where timing matters, patience matters, and understanding the story matters more than hype. Let me know what you think in the comments, and whether you believe the market is underestimating this setup or pricing it exactly right.